We begin here this afternoon with a look at Botswana. The country has introduced a new rule aimed at boosting local ownership in its mining sector. The amendments to the Mines and Minerals Act replaces the government's previous right to acquire a 15% stake in any mining concession. Now, under the new regulation, companies must now sell a 24% share in new mining projects to local investors. That is, if the state opts not to purchase a stake. The Ministry of Mines and Energy says the rule took effect on the 1st of October. Our economics reporter, Innocent Samosa, has the details.
Botswana, the world's top diamond producer by value, is keen to increase local ownership of its mineral wealth and to promote local value addition. With earnings from diamond sales hurt by weak demand and synthetic stones, the Southern African country has struggled to finance its budget and revenue fell 50% in 2024. But how does the new 24% ownership rule impacting Botswana's ability to attract foreign investment, especially in a sluggish mining market? Kevin Totani is a political economist.
There's a good side to it in the sense that Botswana is one of the 30 most unequal countries in the world. According to my understanding, it's very unequal. The richest 20% of income earners in Botswana, they own about 60% of annual income, right? So there's stark inequality in that country. And one of the ways to get that economy going is you have to make it not exactly equal, not exactly egalitarian, but you have to make it a little bit more equal, right? And the downside to having this law now is that it must not delay new investments into Botswana, as some other people have been opining and complaining. Because with this law here, if it is not made to be flexible, it can curtail the inflows of foreign investment and even domestic investment within the economy. So what Botswana can do is they should at least try to make this law as flexible as possible.
He believes local investors have the ability to take up these stakes. However, there's a concern that the new rule could slow projects' development.
Well, look, local investors should have capacity to take some of the stakes within the new concessions, right, mining concessions. But we can't guarantee that they have capacity to take all of the stake, right? But we also cannot rule out their inventiveness, their ingenuity, their innovativeness. They can reach out to international investors as well and make up some consortiums, and then they purchase that stake. They can go that route, that avenue, right? And in terms of now, this law delaying new investment, possibly it can.
Given the IMF's projection of another economic contraction in 2025, Tutani underscored the role of private sector partnerships in helping Botswana diversify beyond diamonds.
What immediately comes to mind, when I look at it, is that the government can go the way of blended finance. The government can partner with the private sector by showing the private sector within certain key sectors of the economy. You talked about beef, you talked about tourism, within certain key, sectors of the economy, the government can say to the private sector, right, we are willing to go halfway with whatever investment you bring into these strategic sectors. And we don't want any return more than 5%, right? In terms of their profits, their financial returns as government.
For Channel Africa News, I'm Innocent Samosa in Johannesburg.
It is exactly 11 minutes after 4 p.m. Central African time as we turn our sights now to Ethiopia. The country is set to initiate early-stage discussions with Chinese authorities to convert part of its $5.38 billion debt into yuan-denominated loans, a move aimed at reducing financing costs, also strengthening bilateral trade between the two countries. The prospect of a currency swap has already had an impact on the markets. Meanwhile, earlier this week, Fitch Ratings affirmed Ethiopia's restricted default rating despite sweeping reforms and an economy that continues to outperform regional peers. For more on this, joining us this afternoon is Mered Fikir-Hannes, founder and CEO of Pragma Investment Advisory. Good to have you with us once again, Mered. Welcome.
Pleasure to be on the show. Thank you, Thami.
So what could have motivated Ethiopia to convert part of its dollar-denominated debt into won-denominated debt?
Yes. So a confluence of factors here. I mean, Ethiopia last year, 2024, joins the BRICS nation, as you know, and it's one of the first early African countries, including Egypt and also other African countries, that joins the BRICS initiatives. And more importantly, since July 2024, Ethiopia has floated its currency, undertaken a huge macroeconomic reform programs, and part of it is also to restructure its foreign debt with its creditors, right? And one of the things, I mean, the biggest creditors that Ethiopia has, I mean, it has an entire foreign debt stock of up to $33 billion, including the IMF package up to recent figures. And out of that, almost $7 billion of it is owed to China. So as part of the restructuring program and as part of the restructuring package, Ethiopia decided to take the initiative and follow the footsteps of Sri Lanka, Hungary, and also Kenya, which already Kenya is under discussion with the Chinese authorities to convert and swap its debt into RMB or yuan, and Ethiopia is doing that. And as Dr. Yob, the new governor, expressed that they're already discussing with the Chinese authorities, mainly the Chinese Central Bank, the People Bank of China, and also the Export-Import Bank of China. And mind you, Ethiopia has already also has a standing agreement with the Chinese Central Bank of the People Bank of China and the Ethiopian Central Bank, which is the National Bank of Ethiopia, to have a currency swap arrangement. That has already been enacted back in 2024. So this is further reducing its balance of payment pressure, especially on the capital account, as you know, Ethiopia is carrying out its restructuring of its loan. Instead of paying it in dollar, you're paying it in RMB, which it alleviates some of the pressure on its balance of payment.
Now, what would be the risks, however, associated with converting the debt from the dollar to the yuan?
Yes, I mean, at the end of the day, like when you do this sort of transactions, when you do this sort of transaction, the first thing you have to look into is the country's trade relationships, right? Mind you, Ethiopia export up to $400 billion of export of goods, mainly goods, to China, and imports around $5.5 billion. So it's the biggest trading partner, right? So from this initiative, trade relationship is very critical when you decide this sort of arrangement. And more importantly, you need to put in place the framework and the institutional capabilities of those two central banks. They need to communicate together. Because at the end of the day, what you're doing is an exchange of reserves and also recognition of reserves, both on the Chinese side and also in the Ethiopian side, where you would allow the two countries to settle payment at a given exchange rate between yuan and. So as long as you have this, it's just similar to what you have in dollar transaction. However, the more important factor is just instead of spending dollars, we just use directly yuan.
And what would be the long-term effects of this, specifically for Ethiopia? Could the swap affect the country's creditworthiness in the eyes of other creditors or perhaps the international market?
That is a good question, Thami. So let me tell you, like yesterday, when the news came out, I think Bloomberg broke the news, and then Ethiopia has already a standing euro bond of $1 billion, and is currently traded in London Stock Exchange. And with the news came about, the market reacted immediately, and the bond price has rallied up to 400 basis points, and it was priced at 99 cents on a dollar. Okay, so which means, from a market perspective, from a creditor perspective, and instead of by diversifying your balance of payment when it comes to your capital account commitment, it just alleviates some of the pressure, because at the end of the day, and instead of the government spending its budget on dollars, it can alleviate it to service other dollar-denominated debt instead of utilizing it for all parties, including China. So what happens is once this transaction goes through, is Ethiopia the government would have a chance whereby they would allocate some portion of it to yuan to purchase yuan, and then some most of it to US dollars. So, the world is de-dollarizing, and then at the same time, there's a huge gold rally as we speak. I mean, gold is standing around $4,300 per ounce. And as you know, and for the first time after 40 years, all central banks, major central banks in the global arena, they're reducing their treasury holding and they're moving it towards gold. So, at the same time, Ethiopia is trying to take that wave as well. And I think let's keep in mind one thing. Kenya take the first initiative in terms of taking this kind of discussions. Ethiopia is following suit, and also Zimbabwe and also other African countries. Definitely, they will be taking suit, taking the step as well. And at the same time, I think that from the Chinese authority and globally speaking, from a financial sector perspective, RMB Chinese authority are trying to push RMB as global reserve currency. So, starting from a swap, and I think it will go so many ways.
You'll remember, Mary, last week, Fitch refused to lift Ethiopia out of the default territory. Could you just recap for us what the reasons were for this? And as well, if you can maybe just touch on what the implications of this will be on bond negotiations breakdown for the ratings agencies and also for Ethiopia's debt sustainability.
Definitely. So Ryan, as you correctly point out, Ethiopia is undergoing a negotiation and restructuring of its debt in its foreign debt stock of $33 billion. I mean, close to $30 billion, because the recent $3 billion is just coming from World Bank and IMF recent macroeconomic reform. So out of that, the multilateral package and also the bilateral package has already been restructured, and MOU has been put in place, and the final draft of the MOU is being ready, and Ethiopia is ready to sign it within the debt committee, which is chaired by France and China, and it's already being ready to finalize it. So the final component of all this is the $1 billion euro bond structuring that which Ethiopia has done, mind you, in the mid-October, and 2 weeks of ad hoc committees of the bondholders and also the Ethiopian authority, mainly led by the Ministry of Finance, has already conducted a negotiation. And that negotiation, I think, mostly in the announcement, one thing you see is that there was a number of back and forth. However, the two parties, mainly the Ethiopian authority and then the bondholders, they have already agreed on how to restructure the bond. I mean, earlier the Ethiopia proposed a haircut of 15%. It was rejected, and then the ad hoc committee of the bondholders, they accepted it, and the maturity both parties has agreed the maturity to be 2029. They reduced the coupon payment from 6.625% to 6.15%, and they already agreed on amortization of payments, and everything has been done, structuring the bond. That has been, both parties has agreed. But the major difference, I mean, I wouldn't say it a major difference, but the difference happened is the ad hoc committee, the bondholders has asked Ethiopia for a value recovery instrument, whereby they requested Ethiopia to compensate their investment. They come up with a sort of an instrument whereby they asked Ethiopia up to 4.75% of Ethiopia's export performance to be paid to them, with an aggregated cap amount of up to $400 million, which will be settled on an annual basis for up to $65 million for the next 10 years, almost up to 2037. Okay, and this will be attached to the bond instrument. And Ethiopia counter proposed saying that it will only be settled for 1.5% of the export performance until 2037, and the aggregate amount that will be paid until 2037 is $150 million, and an annual payment should only be $30 million. So this is the difference that the two parties could not agree, and they finalized the negotiation with impasse, both parties not agreeing on the terms. However, mind you, both parties, both the bondholders and Ethiopia, has agreed on restructuring of the bonds, on the haircut, on the coupon payment. They have agreed on the amortization and also the maturity, on the consent fee, and also all the missed the coupon payment since December 2023 up to $99 million will be paid at the maturity date. All of this has been agreed. The only difference is the VRI, the value recovery instrument aspect. So at least what the authorities has already expressed is that as they would pick up the conversation again very soon.
It certainly sounds like a lot of progress already has been made, as you've highlighted there, Merid. Thank you very much for that update. That's Merid Fikret-Hannes, founder and CEO of Pragma Investment Advisory.
Você é fluente em português? É apaixonado por rádio e quer trabalhar na África do Sul? Você tem documentos que o qualificam para trabalhar na África do Sul? Nesse caso, podemos ter uma oportunidade para você trabalhar no Canal África. Envie seu currículo e demonstração para newsroom@channelafrica.co.za. Lembre-se, se você não receber alguma resposta nossa em 14 dias, isso significa que você não foi selecionado. Canal África, a perspectiva africana.
No matter where you are, Channel Africa is always with you. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 24 minutes after 4 p.m. Central African Time. South Africa's African National Congress, the ANC, held its much-anticipated bilateral with Congress of South African Trade Unions, that is COSATU. The one-day meeting was attended by some of the party's top officials, including the President, President Cyril Ramaphosa, and the party's Secretary-General, Fikile Mbalula, as well as COSATU President Zingiswa Losi, as well as her General Secretary Soli Petwe. The two alliance partners discussed, among others, the ANC's Economic Action Plan, as well as the state of the alliance and the National Democratic Revolution, as well as preparations for the upcoming 2026 local elections. Ndebo Mokobo reports.
We are holding this bilateral, which has been long overdue, in COSATU House, and we are welcomed by the officials, or office bearers as they call them in COSATU, national office bearers of COSATU. We are truly honored to be welcomed in this way.
President Ramaphosa appreciates that the bilateral between COSATU and the ANC is finally taking place. Relations between the two entities date back to their struggle days. Among other things, their meeting took stock of the state of the alliance, discussed the socio-economic transformation, and COSATU's 40th anniversary plan for later this year, as ANC spokesperson Mahlengi Pengu explains.
The leadership of the African National Congress, led by the President, is leading a delegation in a bilateral meeting with COSATU. The substance and the symbolism of renewed efforts at strengthening the revolutionary alliance that we've enjoyed over the many decades of struggle. Some of the items that the ANC is going to be presenting will be the Economic Action Plan adopted by the National Executive Committee of the ANC, and seeking to get feedback and seeking to get a sense from the Federation about how they feel and whether that does address the concerns of workers and the poor and the improvements that we must make there too.
COSATU, on the other hand, welcomed the meeting as an attempt to improve the well-being of the poor and the working class, as its spokesperson Matthew Parks elaborates.
It's a welcome opportunity. The ANC is our alliance partner, it's a leader of government, and I think it's a chance for us to reflect on the state of government, state of public services, municipal services. How can we improve them? How can we really help deliver that better life for working class communities? It's a chance for us also to raise concerns about the performance of the economy, a high unemployment rate, high poverty rates. What can we do to protect vulnerable businesses? What can we do to give more relief to workers, to create jobs, to get the economy moving? Of course, we also have local elections in a year's time. The state of local government in many areas leaves much to be desired across the country. So what can be done in the next 12 months to really fix municipal services, to really improve the quality of local government?
The ANC meets COSATU at a time when its relationship with the SACP is at an all-time low. At the heart of their differences is what the Communist Party deemed as the refusal by the ANC to reconfigure the alliance in over 2 decades. With local government elections fast approaching, Park says the SACP's decision to go it alone has been a worrying factor within the alliance.
Our bottom line is we want to unite the alliance, we want to continue our relationship with the ANC, we want to continue our relationship with the SCCP. They both have different roles to play, they're complementary roles. But I think the message from our workers, from our delegates at our central committee is that we must unite the alliance. We must meet with the ANC, we must meet with the SCCP, and whatever approach we have for the local elections next year, we need to make sure we're all on the same page. We can't afford to be divided. So I think for us that's a critical issue. For us, this isn't the end of the road. There further discussions must take place with the SCCP, but also we want all of us to sit together in one room to say, as the alliance, this is how we're going to manage the elections and to make sure the alliance emerges victoriously in the local elections.
The ANC wants, among others, that COSATU should endorse its recently adopted Economic Action Plan, which seeks to accelerate progress towards inclusive growth and faster job creation. I am Tebo Mokobe in Johannesburg.
It is exactly 28 minutes after 4 p.m. Central African time. Still coming up for you this afternoon on Africa in Business, we'll take a look at COP30. South Africa's Minister of Forestry, Fisheries and Environment, Dr. Deon George, says there should be pronouncements on whether there will be funding for climate adaptation. All of this to enable the South African government to put proper response mechanisms in place. We'll be taking a look at that a little bit later on, just after 4:30. But also really keen interest and focus on youth economy. We'll be speaking to Octavius Pukubwe, who is the Executive Director at Mr. Price Foundation. They're very keen and focusing a lot on the youth economy and preparing young people to participate in a meaningful way in the economy and just looking at what the future of work looks like. And is the future of work here right now? And how are companies adapting to that and enabling young people to meaningfully participate in their structures? That coming up as well for you this afternoon on Africa in Business. It has gone exactly 4:30 p.m. Central African time as we head over now to the markets desk where Thabiso Lehoko is standing by with your latest market indicators.
Business News on Channel Africa. The African Perspective.
Thanks, Thami, and good afternoon. $1 in South Africa is trading at 17 Rand 28. In Botswana, it's at 13.25 Namibia, 17 Namibian dollars 28. And in Zambia, it is trading at 22 kwacha 63 to the US dollar. In Kenya, the dollar will cost you 128 shilling 392. Ethiopia, 149 birr 36. Uganda, 3,000 shilling 464. And in Tanzania, it is trading at 2,000 shilling 450. $1 in Nigeria is trading at 1,468. In Egypt, it's at 47 Egyptian pound 47. Tunisia, 2 dinar 909. And in Algeria, it is trading at 129 dinar 177. The Moroccan dirham is trading at 988 to the dollar. In Angola, the dollar is trading at 911 kwanza 691, while the Congolese franc is at 2,160 to the dollar. A look at commodities markets now. Gold is trading at $4,216 and platinum $1,568 per ounce. Brent crude oil is at $61.09 a barrel. For any business stories you would like to share with us, please send us an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. For Channel Africa Business in Johannesburg, I'm Thabiso Lehoko.
Business News on Channel Africa. The African Perspective.
And standing by for the latest from the business of sport, a very good afternoon to you, Fikile Lingwate.
Sports on Channel Africa. The African Perspective.
Good afternoon, Thami. The South African Football Association, SAFA, is in serious financial trouble. If the federation doesn't cut salaries, including those of national coaches, SAFA will be liquidated. its financial woes are already compromising national teams who travel to major events unprepared. The chairperson of the SAFA's Finance Committee, Mxolisi Sibam, says the financial problems dates back almost 2 decades.
If you want to analyze the current financial situation, you have to go back to around 2002. And then you will see the trend that if you go back those years, 2002 to 2003, 2004, you will notice that SAFA's revenue has really not grown. Because if you were on a 200 million revenue in 2002, 2003, 2004, 2005, and I will expect you to be around the 400-500 million sort of revenue. And we haven't grown to that level. That's basically the first problem. Revenue, the real revenue hasn't really grown.
SAFA's provincial structures have also become a financial burden. There are 9 provincial affiliates who are further divided into 52 regions. Sibam says it's time these provinces and regions take ownership of some of their financial responsibilities.
The Legacy Trust funded the establishment of the provincial executive officers. And when this was established, this a hope that the provinces will raise enough revenue as time goes on to make sure when the funds from the Legacy Trust dry out, they will take over and pay these people. So even now what we're proposing with the PEOs, it's not a salary cut, but what we're saying that now is the time for you provinces to take over part of their salaries. And the SAFA will contribute so much, which is equivalent to the work we think that they are doing for our competitions. So, but to maintain the salaries at the level they are at, the province will have to come in and take that over.
Sibam further states that contracts, especially those of national coaches, need to be performance-based in future. He says coaches will probably have to accept salary cuts, but if they excel, they'll be rewarded handsomely.
We then said, we'll have to convert part of your salary as a performance-based part. So then we'll then propose that we reduce their salaries from a percentage of between 25% and 5%. That then be compensated by introduction of bonuses. And this introduction of bonuses is quite generous, because if in good years, they'll actually get a bonus that is 2.5 of their annual salary.
And lastly, Bulawayo-based football giants Highlanders have received another $250,000 from controversial tenderpreneur Wignell Chivayo as part of the $1 million donation he pledged to the club 4 months ago. The first tranche of $250,000 was dispersed in June, and Chivayo has now confirmed the release of the second installment to support player welfare, recruitment, and administrative costs. They've now received a total of $500,000. The remaining balance will be paid in December and February, though it may be settled earlier depending on their impressive performance. For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Fidel Ngwati.
Sports on Channel Africa. The African perspective. Africa at Play with Neto and ETO Chemane.
I've witnessed something fresh, something exciting, and something very inspirational from the president of the country, William Ruto. Whenever athletes are performing to their best level, he always comes on board to reward those athletes, be it football, be it athletics, and not leaving it up to the sport ministry.
The president realizes that sports is a business, and for that reason, he also reduces the number of people who are jobless, because sports now is such a serious business, and for that reason, commercialization of sports is a major way of improving or increasing employment opportunities for the young people, and that is why the president has been very persistent in trying as much as possible to inspire more sports personalities to reduce the baggage of the people who are struggling to get job opportunities in the country among the young people.
Francis F.M. Motegi, our correspondent from East Africa in Nairobi, Kenya.
Live every Saturday and Sunday from 2 to 5 p.m. Central African Time. No matter where you are, Channel Africa is always with you. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 37 minutes after 4 p.m. Central African time as we focus on the issue of youth unemployment and what various corporates, through their foundation arms, are doing to try and alleviate that and better capacitate the youth of a country. So the Executive Director at Mr. Price Foundation, Octavius Pugubwe, says South Africa's economic recovery depends on unlocking the productivity of its youth, and that this could be done by preparing young people to meaningfully participate in the economy of the future as industries evolve and automation becomes the order of the day. Pugubwe says the Mr. Price Foundation has achieved measurable impact by offering training and jobs to 70% of unemployed youth. And they've done this, he says, through the Jumpstart program and also supported young entrepreneurs in their quest. For more on this, the man himself joins us in person, in studio. Here's Octavius Pugubwe, Executive Director at Mr. Price. Good to have you with us. Welcome.
Thank you so much, Thami, and good afternoon and evening to all your listeners everywhere they are.
So let's talk about Mr. Price Foundation. What exactly do you do as the foundation? What do you focus on?
The foundation is 20 years old. We focus primarily right now going forward. We've got a new strategy to really focus on youth empowerment. Youth empowerment through 3 levers: skills development, entrepreneurship, and education. And we've had some excellent results in the past 20 years of the work that we've done. 100% of our focus areas now is really obsessing around how do we champion youth empowerment, and that's what we do in all the things that we do: is skills development, entrepreneurship, and education.
Now, you primarily as a business are in the retail sector.
Yeah, 100%.
So does it mean, by consequence, that you support skills development, entrepreneurship, and education within the retail sector, or are you sector agnostic? Yeah,
we're actually very sector agnostic. We're also very privileged in the sense that while the Mr. Price Group is the founder and the core investor and supporter of the work that we do, we're actually a public benefit organization, and even in the way we operate and how we discharge our responsibilities and run our programs is because the support we get is also from other organizations, right? So we're compelled by the investors and the supporters and the donations and that we receive, which also include the customers, by the way. So we can't only just focus on retail. Of course, it's our play, it's our power play, whether skills development or entrepreneurship, as it were, but we're operating agnostically across the board. So we're fine. We're confident that in the areas that we do, we have no limitation that it must be restrictively and exclusively with the group.
Within the group, because the truth is, everything is interconnected,
right?
And there's a value chain,
100%.
Even to the retail business.
Exactly.
So it might not necessarily be within your particular sector,
right,
but somewhere it will be a tributary that feeds into what you already do. But let's get back to the issue of youth unemployment in the country. It still remains unacceptably high. And South Africa has one of the highest youth unemployment rates in the world. What do you believe contributes to that?
A number of things contribute to that. One, generally speaking, you've got the economy that's not growing at the right level, at the right pace, to be able to create opportunities to absorb as many young people. That's one. Two, other things that cause this high levels of unemployment is that we haven't seen enough investment, productive investment, in really creating material opportunities for young people, whether it is investment in infrastructure, investments in small businesses, investments in new skills that we need to require. But thirdly, the other thing that contributes to this, we argue, based on the work we've done in skills development and other spaces, is the rate of policy, evolution has also contributed. For example, let me practicalize this thing. In South African context, you run a skills development program, and we've got major opportunities to do that and run the skills development programs that are responding to the industry need. But the pace at which the industry is moving is not matched by the regulation that governs the skills development. Similarly, if we invest in universities, TVET colleges, etc., the evolution and the speed with which industries are moving, the skill acquisition and the knowledge base are not moving at the same pace. So by the time the industry is at this point, we've got a cohort of young people who have acquired skills that have not matched the space on the pace of the industry. So a number of things contribute to that. But of course, there are, in our context and many other countries on the continent, you've got other socioeconomic factors that contribute to that. Exclusion, vulnerability. A lot of communities have been, excluded from a lot of opportunities, access to information, right type of information, underfunding, also across the board in various sectors, whether it's education, whether it's health. Those things contribute, by the way. I mean, I grew up in Limpopo. Many of us know, you grow up and it's really by just a chance that you get an opportunity, you break through. And if you were given the right amount of support and equal opportunity, you probably would have succeeded.
Because foundation is actually everything.
100%.
Foundation is everything. You touched on this a little bit, and I want to pick up on it, about the mismatch and the lack of congruency in development. When you look at legislation and you look at what the market actually needs and development therein. You mentioned earlier on that I was talking about the future of work before you came in. And I was just telling everybody that I'm looking forward to our conversation because it is also about capacitating young people to be able to fulfill not just jobs for here right now, but the jobs of tomorrow.
100%.
How do you throw forward? How do you cast your eye into the future of what work will look like? And I do beg to say, I think young people are probably so much further ahead than what we think, because in many ways they are the ones that are creating the future of what work is going to be like, especially with the evolution of technology.
They are taking the initiative.
That's right.
But I want to also argue that, just as much as young people are taking initiative with the very little resources that they have at their disposal, we should never therefore make it an expectation, because the onus and the responsibility is just too heavy. And then it absolves all the other different stakeholders that must play an equal role to simplify and create railways or paths for young people to easily take charge of their lives, right? One of the things that we've seen based on our work and what we think the industry across the continent is, for example, if we ran everything else based on demand. So people argue and say, no, there's a mismatch. Okay, fine. Right, let's maybe continue with this logic of mismatch in the industries. So, right, let's go and speak with the industry. Industry, what skills do you want? Thami, you are the CEO of this business, etc., etc. You are an influential player in this market, in this sector. What skills do you want? And you say, right, Octavius, I need the following skills, right, between now and the next 4 years, 5 years, and 10 years. And then I bring it back, that demand, and I introduce or I run investments in education, in training, so to fit and meet your demand. So that when I come back to you and say, Thami, I asked you 12 months ago, what skills do you want? You told me these are the skills that you want, and this is how much of the skills you require. And I went and invested based on that. So you can't come now and turn around. So that dichotomy that exists in the market, this is what, in how we run our investments, that they must be demand driven.
That's right.
Before we say, okay, let's run an SME development program and empower young people to start business. Okay, based on what?
Based on what? There's got to be some intelligence. That informs that decision.
Exactly.
But I want to talk now about your objective as the Mr. Price Foundation. You recently announced that you want to empower 500,000 young people by the year, 2035?
Yeah.
How do you plan to do that?
Geez, it's a very ambitious goal. We plan to do it in different ways. So one, we want to make sure that the type of programs that we run are very resilient and are very demand driven across the board. We've got a portfolio of many programs. So we believe every program that we want to design and launch, and those that we run and want to scale, is it based on demand? What's this demand that's informing the need to invest R1, $1, $1 right? Two is when we've got the sort of approach around our programs, we're able to then, one, we receive funding from the Mr. Price Group. From the group, we receive funding from other players, the likes of Valterra Platinum, APSA, CHAP, SPA group. So we are going to empower 500,000 young people through partnerships, in how we believe the use of philanthropic capital can catalyze the sort of change that we want. But we can't do that remotely and far away from different ecosystems. So we've got to stay close. And the way we've envisaged partnerships, we don't envisage partnerships in linear form. Is that the partnerships can be linear. For example, we've partnered with Valterra Platinum, ex-Anglo Platinum. It's in mining, we're in retail. You ask yourself, how do you guys come to work together? It's because we say in the mining communities, everywhere you go, the characteristics of those local economies is that retail will exist. And how do we work with yourselves? So we are going to achieve that through the partnerships, through scaling the sort of programs that we have, getting a sort of funding, I suppose, investments from different players. But we also believe that part of how we're going to go there is to drive two things. One is the industry, the big sector or the big business can only create jobs to an extent. Young people are not hegemonic. We've got to also create other platforms for other types of young people. And another area for us is let's help and empower and partner with the young people who want to start their own businesses. Because on one end, you can directly influence how many jobs you want to create as a business, as Mr. Price Group, as SPA Group, etc. But there are other young people who actually have got brighter ideas, have built businesses that are sustainable and can contribute in our ability towards that. And that's how we do it.
And what type of relationship do you have with the SETAs, in the sense that a lot of the SETAs are obviously focused more in skills development, and you talk about the youth not being just one group. Do you focus on skills development as well, in the same way that the SETAs would? Are you, because you're targeting the same market?
No, we are.
Because it's young people,
100%.
And it's mostly young people from disadvantaged backgrounds. Do you also play in that field,
Yeah,
whether it's CAT SETA or InSETA or whichever of the SETAs?
We have a very good relationship with WRSETA. Our relationship with WRSETA is really on a number of ways. One, we know that retail and clothing sector is an important sector. We try and drive the information and the knowledge towards enabling young people to see and understand that opportunities in that value chain are not just at a storefront, at a store level. That you need machinists. Right now we need machinists. We need pattern makers. You and I are wearing garments. There are people who must make those things. That's the skill we need in the production of the things that we require in the retail outlets. So that's how we partner with them to really drive that message. Another way that we also drive and we're forging these relationships with them is how do we start building micro credentials for young people that have, for example, if only a matric, which was what we target, we just have to have a matric, but we know that they're ambitious, they want to learn further. How do we build micro credentials platforms to enable them? So we work with WRSETA as well in there, most of which is really at the inception level stage. I must be honest, but we also take lessons from some of the presentations or innovations that are coming from the different programs that WRSETA works and incorporate them into the work. And then lastly, we all respond to the skills plan of the sector in the same way. So we see our programs also running parallel to that, to augment what WRSETA does at a commercial level with the corporate companies. We add additional programs around how we do not necessarily require young people to have a qualification per se. And we enable those kind of grants.
So do you work directly with the young people, or are you working with other NGOs that will connect you to your target market?
Our operating model is very different. We are more of a practitioner, so we work directly with young people. Unlike other foundations, so we ensure that we directly engage the young people, whether entrepreneurs, whether those that are looking for skills or jobs in the retail and clothing sector, and agriculture. We also play in the agricultural space. Education was something that we're doing very differently in education, where we're looking for young people who are future leaders of education or managers of education and want to empower them to run ECDs and learning hubs so they can support part of what we're investing in the ecosystem of education. So we work along those different ways. Yeah.
So very much on the ground. And before I let you go, I'd like to flip our conversation and to talk about the tax benefits of philanthropy.
Yeah.
What do businesses benefit from the tax side?
Yeah. Well, I mean, there's a lot of incentives that are available, and I think it's a one way to really encourage commitment and investment. So, for example, on the skills development side, you've got your ETIs that are available to corporates, and it's not limited to Mr. Price, but an important way for the government to say, if you play a role, we also will play a role. From a donation side or donor side, you also get a Section 188A certificate to really get a rebate on contributing to the work that we do, and we receive donations. Customers donate to us, and there's a benefit for it. You get a rebate. But over and above that, I mean, really, Thami, that even incentive, it doesn't go as much as the number and just the total investment that goes into running this kind of programs.
Yeah. Well, look, wish you all the best.
Thank you.
2035 is literally just around the corner.
No pressure.
And 500,000 people.
There's
not a small number.
It's not.
But I see you are growing your beard, so you've got a good 10 more years. By the time it reaches here, you'd have probably gotten all the young people.
Hopefully not great, Thami. But we'll come back and report.
We'll talk in 10 years' time.
Yes, not 10 years' time. 2-3 years we must come and report how we're progressing.
All right, well, we'll note that. Thank you so much, Octavius. Thank you for coming through. It's been a pleasure.
All right.
That's the Executive Director at Mr. Price Foundation, Mr. Octavius Pukubwe, taking us to exactly 4:53.
We are on Open Views Audio Bouquet. Channel 628.
Zilipendwa na Abedi Jean de la Croix.
Leo tujadili kuhusu chipukizi wanaoimba nyimbo za wasanii wengine. Unadhani hili linatokana na nini, Omari?
Nadhani kweli kwamba tukizama muziki ya sasa, hasa wasanii ambao ni chipukizi, kwa kweli kwamba yani karibu kutoka muziki wao wenyewe, lakini wanakuwa wanapenda kuhubiria muziki ya zamani, hizo muziki ya wengine ambao ni taimbo.
Wengine wanadai kufanya hivyo ni kupromote vipaji vyao haraka ili waweze kujulikana. Je, yawezekana kukawa na ukweli wowote au ndio kukosa kabisa kipaji cha kuandika mistari?
Ndio, unaona kwamba msanii anapoazimia kwamba kuchukua wimbo mwingine wa msanii mwingine na kurudia yani mara mbili hivyo, haionyeshi kwamba yani ndio wanaanza kazi ya muziki. Ukiangalia kabisa asilimia kubwa utakuja kuona kwamba wanakosa ile mawazo ya kutunga muziki.
Zilipendwa kila Jumamosi kuanzia saa 12 kamili majira ya Afrika ya Kati hadi saa 1 kamili majira ya Afrika ya Kati.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
All right, let's take a look now at our Standard Bank feature. Now, South Africa's wind energy sector is rapidly growing, with over 34 operational wind farms currently providing significant power as well as jobs. This is over 53 gigawatts of projects in development. The centre's expansion is crucial for addressing the country's energy needs, reducing load shedding as well as meeting its carbon reduction goals. Speaking at the Windaba conference and exhibition, Vincentia Letish, Executive for Energy and Infrastructure at Standard Bank, highlighted that the country's wind energy sector has evolved into an established investment landscape. To unpack these trends, we're joined on the line by Vincentia Letish, Executive for Energy Infrastructure at Standard Bank. A very good afternoon to you. Welcome to Africa in Business.
Good afternoon.
Now, so with the transition to clean energy, how is South Africa's wind sector actually performing? How are we doing?
So we're doing well. There's been a lot of investment into wind projects in South Africa. This was largely driven by the start of the REAP, the Renewable Energy IPP program, from the bid window 1. And through that, many wind projects were financed, and the maturity of wind farm financing and wind farm risks was understood by both local banks and by local investors in the market. Now we're looking at a situation where there are quite a few wind projects that are being financed for private power or private entities off taking that power. And so wind in South Africa is an irreplaceable resource. It's cost effective, It's an essential solution. And so very much South Africa has world-class wind resources, which we really need to utilize to as a decarbonization driver.
So is wind energy attracting the needed and necessary investment to the sector?
It absolutely is. Wind power is, looked on very favorably, but one of the bottlenecks in terms of investing in wind energy projects at the moment is grid capacity. And obviously the areas where they're the best wind resources are in areas where all of the grid capacity has already been utilized. And so now having to look at wind farms where there is access to the grid is potentially in areas where the wind resource is not as good as sort of the coastal areas in the Eastern Western Cape. That being said, the grid capacity bottleneck is there, but there are solutions to try and address that, where infrastructure in terms of transmission, MTS, substations, etc., are happening so that these wind farms can connect.
And on that very point, could you talk to us a bit about the impact on South Africa's energy crisis, as well as load shedding, the kind of impact that had on wind energy investment, and especially now with the talks of an energy mix that includes nuclear? We were actually just discussing that on the show yesterday.
Absolutely. So the driver and sort of the growth in renewable energy and alternative sources of energy from and away from coal was largely driven by the impact on
Vincentia, I do apologize, ma'am. For some reason, the quality of our connection just disintegrated there towards the end. I do apologize. We are going to have to leave it here for today. Hopefully we'll have an opportunity to be able to pick that up a bit later on. But that's Vincentia Letish, Executive for Energy and Infrastructure in Standard Bank. Apologies for that. It is gone now exactly 58 minutes after 4 p.m. Central African time, as we say a very good afternoon to you. Welcome.
Bonjour Thami, bonjour, merci beaucoup, bonjour à tous les auditeurs. Sur Vue d'Afrique tout à l'heure, il sera question de la présidentielle au Cameroun. Issa Chiroma Bakary revendique la victoire, et aussi de la RDC et du Rwanda qui se retrouvent à Washington pour la 3e session du mécanisme conjoint de coordination. C'est tout à l'heure sur Vue d'Afrique. Merci Thami.
Merci beaucoup. Well, that's how we come to the end of Africa in Business for this afternoon. Thank you so much to our entire production and editorial team. This has been Africa in Business on Channel Africa. Do stay tuned to Vue d'Afrique.